EPS or earning per share. This ratio reflects the return generated on equity share. It can be calculated as profits after interest, tax and preference dividend divided by number of equity shares. Number of equity shares. Now students, basically saying it means how much profits are available to equity shareholders, which is reflected through profits after interest, tax and preference dividend. That means out of profits we deduct interest, then we pay tax and then we pay preference dividend. Whatever is left after this is something which is available to equity shareholders. This profit should be divided by number of equity shares, so we will get the returns generated on single equity share. Higher this ratio or higher this value, better it is considered for business. Remember, it is always expressed in monetary terms per share, that is rupees per share. Both these components usually are given in the question. Number of equity shares are usually mentioned in the question. Profit after interest, tax and preference dividend is given in the question. But in case profit before tax is given, you will deduct interest, tax and preference dividend and arrive at this figure. Let us take an example to understand this EPS or earning per share.